Quantum Cosmos presents Certified Financial Guardian, a seal of ethical selling. Privileged to bring you Nilesh Shetty. Nilesh has been a part of Quantum Mutual Fund since December 2009 and at present is the Associate Fund Manager of Quantum Long-Term Equity Value Fund and Quantum Multi-Asset Fund. Nilesh has over 13 years of experience in research and is a qualified Chartered Financial Analyst, CMA from CIMA UK, and also has to his credit a MMS in Finance from University of Mumbai. Nilesh has also been a part of Quantum's multiple path-to-profit events held in various cities where he interacts with investors and guides them with respect to his funds. Nilesh, thanks for joining. We'll discuss expectations from Modi too, and can the government walk the talk? Sure. So even before the poll pundits came up with their exit poll projections, Amit Shah said, "Ab ki baar 300 par," and he did it. He was proved right. The BJP alone got 303, and along with the allies, they got 352 out of 542 in the Lok Sabha seats in 2019. It was a resounding victory. Decisive mandate, an absolute clean majority, there's effectively no opposition left. So what led to this tsunami, as they call it? Did Modi, one, deliver on their achhe din, as they say, purely looking at the numbers and the macroeconomic situation in your view?
I think if people had been looking at the macroeconomic situation, I don't think this mandate would have come, because the data on the ground has not been that great.
Right.
The more we interact with companies in terms of demand outlook and just the stresses that are being created after IL&FS, including rural distress over the last few years, things have just not been great. That is also backed up by sort of rising unemployment, which is coming through the NSSO survey. So hence the numbers have been actually a surprise to us as well, given that it's been disconnected to the ground level economic data. Perhaps what has worked for the government is a narrative of a strong leader versus perhaps a leader in the opposition which is not, or doesn't appear to be that strong. Second is of course the surgical strikes that happened on Pakistan and the requirement for there to be a strong leader. And then, of course, just demographics and a lot of new voters coming into the system, and they voting not based on historical caste lines and sort of communal lines, but wanting to vote for a strong leader. Perhaps that is what has caused. But we've still not figured out what led to this sort of massive wave towards the BJP and Mr. Modi.
Okay. So, in your view, is India better placed than China as far as an investment destination goes, as many experts like Mark Movis perceive? Do you think so? Because if yes, what works in favor of India compared to China?
One of the big advantages that India has always had is this nice entrepreneurial culture of producing entrepreneurs. Now, China, most of the growth has been driven by the state, while in India the story has been despite the state, where entrepreneurs have come through without much government support, and just the return ratios and the requirement for companies to make higher ROEs sort of tells you that you're investing in quality companies. So in that sense, for an investor, you have a much better pool of companies to choose from in India. And the story itself is not yet played out. China is already a very scaled up economy compared to India. So I think for an investor who's looking to invest in the long term and looking to invest in great entrepreneurs, trying to cater to a very varied set of demand requirements across a very diverse cultural and socio-economic background, I think perhaps Indian managers and companies would appear a lot better than China.
Okay. So in your view, is the reform process going to continue in Modi too? Because Mark Movis said that what India needs now, he spoke to Economic Times and he said what India needs now is reforms, reforms and reforms. Do you think Modi too can deliver on reforms? Will that reform process continue, or we will see cow politics, Ram Temple and Hindutva agenda?
Yeah, but the same expectation happened when Modi 1.0 came into the government, right? Again, they had a decisive mandate and people thought he'll sweep, initiate a lot of reforms. Unfortunately, that did not happen. One of the big things that needs to happen in India is the factors of production, be it land or labor, needs to be freed up, which is a very, very difficult thing to do for a politician, because India is always in an election mode. If not national, then state elections are happening. And most parties in power do not want to give a reason for the people to swing their votes to the opposition, and these are hot topics, land and labor. Perhaps great for the long-term sort of economic well-being of the country, but perhaps may not win you elections. So we'll have to wait and see. I think the previous term of the government, they've been very gradual in trying to do something. I doubt whether they'll materially change that sense. I believe there'll be more of incrementalism rather than sweeping reforms that people expect.
Okay. Because the economy has really slowed down. The health of the economy does not look very great. There are some serious issues, as you rightly mentioned. Farm distress, agriculture growth has gone down, manufacturing has dwindled. Of course, there are blips of bumps in between in the data, but overall the core sector data is weak. Then NPA problems, liquidity crisis, credit issues with a lot of the credit-related issues have emerged of late, and unemployment rate is at a 45-year high.
Yeah.
Exports have been sluggish. Consumption is totally slowed down.
Yeah.
So how do you read this? Because the idea of development is not really coming to a reality. And will this economic growth see inclusivity also, as Modi says, sabka saath, sabka vikas and sabka vishwas?
Yeah. Again, so it depends what kind of growth India has. Is it sort of concentrated, driven by select few industrialists, or is it much more widespread and there is sort of massive competition and open competition for people to sort of take part in? Historically, actually, we've had very few select families driving growth in this country. Some of those have sort of the chain got broken somewhere around 2012-13, especially after Supreme Court sort of came hard on allocation of mines and natural resources and created a transparent system in that mechanism. So given that India traditionally had a free media, a lot of the problems come out, which is a big advantage in India, and some of these sort of decisions at some point in the future get reversed, decisions which favored select industrialists. But like you pointed out, there are a lot of problems right now. Demand has actually fallen off the cliff and falling vertically quite quickly. Plus there is a issue in the finance or credit markets of this country, and generally there has been an overcapacity over the last few years. We are inching better in terms of capacity utilization, but there is no appetite for the private sector to set up new capacity. The more people I talk to, there is not much appetite. So till private investment picks up in a big way, I don't think India will sort of have the kind of growth that it had in 2003 to 2011-12 in that entire period. A lot of it was driven by private sector coming in large projects and investing in large quantities, which sort of tapered off after 2013. So I think next few years will be tough, but hopefully it's a cyclical downturn. At some point, utilization start again reaching 80-85%, and then private sector again starts coming in a big way. And some of these issues on roads and power and other sectors, if the government creates a transparent mechanism where there is a clean set of promoters who come in, and then banks have the confidence to fund those promoters. Till that happens, I think we'll have to wait for the traction to pick up in the economy.
Right. We have an erstwhile defense minister who is now the finance minister, Nirmala Sitaraman. What are expectations from her as regards the full budget goals, which will be presented in July 2019?
Yeah, our sense is there will be some sort of a stimulus given in the economy. Our sense is RBI itself will start lowering rates, and the government will again raise spending to reverse the downturn we are seeing in consumer demand right now. So in that sense, the fiscal deficit number will be something people will keep an eye on. The other is, of course, a sense that people have had for a long time of simplification. So, I mean, just the government originally started off with minimum government and maximum governance, but the actual data that interaction from the company has been the opposite. So the companies that we meet saying there is a lot of interference from all these departments on the ground, and there is continued harassment. So at some point they have to rein in all these departments and figure out how do you simplify a lot of these things on the ground, including the DTC. The DTC has been waiting for a long time to be implemented. Perhaps you might see implementation of DTC coming in, the direct tax code. So at least our sense is tilt towards more spending from the government, and then another tilt towards simplification of the existing set of norms and rules that we have.
So you're talking about ease of doing business.
Yeah.
From a mutual fund industry point of view, what would you like to see for the industry?
For us, again, and I think there is some sort of sense now, because the KYC requirements for someone to invest in a mutual fund, because he has to do it all over again, even if he's investing to a bank account or through a already KYC compliant system. So for someone who already is KYC compliant in another part of the financial system, for him to start investing in a mutual fund, why does he have to go through all the documentation again, right? So simplification of KYC compliances. The other is we have equity fund of funds, which is a great product, but again it's taxed as non-equity for some reason. So just ironing out laws. If you are investing in mutual fund, equity mutual fund, it should be treated as equity. So some of these anomalies, if they are removed, I think perhaps investing in a mutual fund becomes a lot simpler for people.
Right. And how are you seeing the markets? Because right now the market has given standing salute. We are over 40,000 now to this mandate. So it's given a standing salute to this mandate. How are you seeing the markets?
Yeah, like I said, the economy and the markets are going in two different directions right now.
Right.
So the economic data that is coming out is very weak. The companies that we are meeting are suggesting demand is not that great. And the share prices of a lot of these companies, it's a concentrated rally, but still by and large share prices are going up. So that is where we are worried in terms of what is happening to valuations on the ground. So we are turning cautious. Cash levels in the fund are sort of going up because we are forced to sell or trim positions right now. So that is, we are sort of optimistically cautious right now on the market is the line I'll give you. Our sense is the cycle is sort of recovering on the ground in terms of utilization. At least the capacity utilizations are moving high for companies. So at some point capex cycle will kick in, maybe a year or 2 years down the line.
But that's a long haul.
Yeah, that's the long haul. Near term, I think there is a disconnect between valuations for most companies and the underlying trend that we are seeing in terms of demand.
So as you're saying valuations expensive, how are you approaching the portfolio quantum long-term equity value fund?
Yeah, for us, we have a simple process where we have a buy and sell limit for most companies. So if they come below buy, we buy these companies, and if they go above sell, and if there's no reason for us to upgrade the earnings, we exit those positions. So for us, recently the trend has been that some select names have started breaching our sell limits or reached very close to our sell limits. So we are trimming them, and but it's not just that generally
so
market
managements for selling, or they're just hitting your target price?
No, it's just target price, nothing else. Just valuations have reached a level where we are not comfortable in. But there are pockets where we are also finding value, like the auto sector. There has been a significant correction there because near-term data points are weak. So we've added an auto name to the portfolio. The NBFC sector after IL&FS, we are getting some names there where valuations are making sense to us. Overall, market looks very expensive, but there are some pockets which have seen significant correction.
So are you discovering value in the small and mid-cap segment as well? Because they've been beaten down since the last year now, since February 2018.
Yeah, but still not. So one is, of course, we have a liquidity filter, so we need names to be liquid before they are considered for the portfolio. So a lot of these small mid-cap names are not liquid enough for us to buy into them. But the quality ones have not materially corrected. Even if they have corrected, even after the correction, they are still trading at very high valuations. So not so much in the small and mid-cap names, barring perhaps a gas utility or one of these players. But apart from that, by and large, the portfolio still remains, or the new names are coming from the larger caps in the portfolio.
Would you recommend small and mid-caps to investors at this juncture? Mid-cap funds?
Given the rally, I don't think the correction has been enough. I think if you see the rally from 2013, from the peak, they are down by 50%. But since 2013, they are still fairly up. So I think perhaps investors need to be cautious in that space. Again, there are a host of managements with very weak corporate governance, and I see that in every cycle, every bull run, they tend to go up, and then when sort of reality sets in, and they fall vertically, and investors lose a lot of money. Very similarly, in this cycle, some of these managements have gone up and they've corrected, but there are still enough names where valuations are not making sense.
So you would recommend investors to be with large cap funds and multi cap funds and value funds?
Yeah, they can have a small allocation of mid cap, but the larger allocation should be in sort of large caps and sort of more multi cap funds.
So you've discussed the challenges and opportunities for Modi to government, and while handling the economy also, there are a lot of other issues currently. It's not going to be an easy task for Modi too. In your view, what role would quantum multi-asset fund play in an investor's portfolio now?
So for us, the multi-asset product is actually positioned for people who have very long-term savings parked in fixed income instruments. So the multi-asset essentially is our version of a balance fund, where traditional balance funds have had 65% minimum in equity, which makes them technically unbalanced, because if the market falls, they will fall in line or sometimes even more. So for us, the maximum is equity. So people who do not like the volatility of the markets but want a much more safer allocation with better risk adjusted or at least risk adjusted safer investment avenue, do not like the volatility of equity, then multi-asset is a great product for you. So our sense is it's sort of somewhere in between a fixed income product and an equity product, a lot less volatile than equity, but given but has a slightly higher risk than fixed income product. So it will give you a return profile somewhere in between. So that is where you have to position the product in your own investment basket.
Interesting. My last question: which are the 3 books you would recommend investors and advisors to read, and you love to read?
Yeah, so of course, given that we follow a value style and traditionally we've been sort of value investors, the sort of Ben Graham's books have always sort of dominated our reading list. So including Intelligent Investor and Security Analysis were the original books which you start reading off. But as you sort of evolve and realize your own limitations of investing, there is this interface of psychology and investing, right? So you behavioral finance. So books by Daniel Kahneman and there's a book called Influence by Robert Cialdini, which Munger always recommends. That is a great book to read. The other is, of course, recently Richard Thaler's Nudge, which I've read, and again, most of them have sort of behavioral finance, where human behavior and finance sort of intersect, and it sort of proves that you consistently make mistakes because you're designed in a certain way. And how do you limit your mistakes? So a lot of investing is not sort of choosing the right stocks, but avoiding the bad stocks. That is sort of, they don't do too much damage to your portfolio. So recently, or over the last few years, I've sort of spent more time reading and understanding that part of investing. And that is where I sort of spend most of the reading time on. Right.
All right. Okay, Nilesh, thanks for joining and thanks for your valuable time. I'm sure the IFA fraternity will benefit from your valuable insights.
Thank you so much. My pleasure.
Thanks.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.